Hello, and on this episode of the Mortgage and Protection Podcast, we welcome back Dylan from Henchurch Lane, this time to explain how an agreement in principle works as someone who is self-employed. Thank you for joining us again, Dylan. How's it all going?
Yeah, really good. Thanks, Tessa. How are you doing?
Good, good. I'm glad to hear that. And yes, all good too. Thank you. So
Good.
let's get straight, thank you. Let's get straight into the questions that we've got here then for this episode.
Yes.
So, of course, first of all, can you get an agreement in principle, or AIP for short, if you're self-employed? And is it harder to do this?
Mhm. The short answer is you absolutely can. Um, is it harder? The process isn't really any different to if you were employed. Difference being is just that you'd have to give different documents, look at different types of incomes, whereas people that are employed will just look at their pay slips, or if you're self-employed,
Hmm.
slightly different documents, which I'm sure we'll be covering off in some of the other questions that we get to run through.
Yes, definitely. Okay, well, there we go. A good start there. Let's follow on then with the next two questions here. So, people would like to know how is self employed variable income assessed for an agreement in principle? And can I use more than one source of income when I apply for an AIP?
Yeah, so it's for self-employed people, it can be quite normal to have different income streams. So for someone and like the different like types of self-employed people, when I say that, it's like whether someone's a sole trader or a limited company director, for example. So
Right.
if you're a sole trader, then what the lenders will look at is they'll look at your SA 302, so your self-assessment for the last year or 2 years, and they will take the self-employed figure from that. So that's what they'd look at. And within inside that, they wouldn't actually see from that point that there's any different sort of income streams or anything else. And if you were a limited company director, obviously that income would just be driven from that business. But if you did anything else on the side, then your self-assessments would incorporate that into being able to use towards your affordability. So you absolutely can. Um, it just needs to be proven by the documents you've got in your bank statements and stuff to show the income coming in.
Right, okay. So something to be aware of there then, but good news. Let's see what we've got next then. So people would like to know, how is affordability calculated for an agreement in principle for self-employed borrowers?
So, um, the the actual like, the form that you go through, everything is the same as if you were employed, so it's not like a completely different system or anything like that at all. But
Mm.
essentially, what the lenders will do is they will assess your income in different ways for different types of self-employed borrowers. So, as we said, if you're a sole trader, for example, what they'll look at is they'll look at your SA 302s. And if you're a limited company director, they'll use your salary and your dividends, or your salary and your share of the net profits for the company.
Mm.
And then the lenders will generally time this income by 4.49. There are lenders that will times by five and a half times, depending on, different schemes, deposit sizes, other different bits and pieces.
Mm.
And then that will give you your borrowing amount. So that can be impacted by sort of other commitments. So if you've got any dependents or anything on finance, credit cards, all those bits and pieces, that can sort of generally drop the affordability to some extent. As
Mm.
a general rule of thumb, they will take your income and times it by 4.49 or 4.5 to be able to give you a figure. Um, a sort of a keynote on that as well is that the majority of lenders will look at doing for someone that's self-employed sort of an average of the last 2 years. But now, as things are evolving, there's quite a good few lenders that can now work off the latest year's figures or even just 1 year's self-employed accounts if you've only been trading for 1 year. So yeah.
Yeah. Yeah, that's great news there, and that answers that. And just to reference, we are recording this episode in July 2025. So let's move on then. I think it's back to those documents actually. So, what
Mm.
information do self employed borrowers need to provide when applying for an agreement in principle?
Yes. So, um, income documents wise, the things that you'd want to be looking at are, as we said before, so if you're a sole trader or a limited company director, they're going to look to see your last couple of years' tax returns or the latest year's ones if that's what you've got. So, for your SA 302, your tax year overviews, it shows what tax is due and how much has been paid or due to be paid.
Mm.
And if you're a limited company director, what they'll look at or what the lenders would expect us to look at things like your limited company accounts, which just show like your profits, your net profits, and also your bank statements is really quite an important one as well
Mm.
because they will cross-reference that to sort of make sure that the income matches up to what you've declared tax-wise, basically as well.
Okay, so there's the breakdown there. Preparation is key when it comes to the documents, isn't it?
Yes, absolutely.
Okay, so let's continue on then. We've got two questions here combined. So, how reliable is an agreement in principle, and how long is
Mm.
an agreement in principle valid if I'm self-employed and my income changes?
Yeah, so for the first part, how reliable is an agreement in principle? So this isn't to give a funny answer, but it's as reliable as the information that you put into it.
Mm,
So I'll extend on that. So personally, whenever I do an agreement in principle for a client, I will get all of the documents up front that the lenders would assess for a full mortgage application, so that we can base it upon the real accurate real life figures of what they're going to be looking at. So by doing it that way, it gives it the most accurate chance of being right as possible because it's going to be exactly the same information that they would then see the other end.
mm.
In terms of how long it lasts as well, so as a general rule of thumb, some lenders will do 30 days and another set of lenders will do like 90 days. So it does depend on the lender, but between 30 and 90 days usually.
Right,
Um,
okay.
and then there was another part as well, the income changes, is that right?
Yes, that's it. Yeah.
Yeah.
What happens if it changes?
So it'd be the same if anyone was employed. If you've got variable income or income that changes during that process,
Mm,
how much you can borrow is valid at the point of mortgage application. The agreement in principle is well, it's an agreement in principle. So it's
mm,
basically to say like, based upon what you've told us now, we could lend you this much, but it is subject to change if anything did change. So if the income changes during the time between an agreement in principle and a full mortgage application, then the amount you can borrow may change with that. So
mm,
what I'd suggest doing is just undergoing that the agreement in principle process if the income has changed ever so slightly, just so there are no nasty surprises.
mm.
Um, but with self-employed people, because the documents that they're going to be looking at are based over a 12 or a 24-month period, it's not that often we actually do see that the income changes massively. So it may not be something that you really, really need to worry about.
Okay, well, hopefully that sounds reassuring there and that's all clear. So we're getting through these questions. We've got three left. Let's move on to this one. So, will I need a credit check? And does a decision in principle, another term for agreement in principle, affect credit score?
So in terms of any agreement in principles, the majority of them now are actually all soft credit searches, so they don't actually have an impact on the credit scoring. If the question was, would you need to have your credit report before you start looking? And I would always say yes, because you want to be able to know what your credit scoring is, knowing if there's anything on there that would need work. But if it's to do with just the agreement in principle side of things, they're soft credit searches, so you could do five of them and it wouldn't impact your credit rating at all.
All right. So that's good news there, then, in case you were worrying about that. So, of course, if you're new to this, then how do you apply for an agreement in principle if you're self-employed, and how long does that process take?
hmm Yeah, so there's a few avenues to get an agreement in principle. So, I mean, to be fair, total transparency, you can get an agreement in principle online. You can go
Mm,
to a lender and you can get an agreement in principle online. It's very, very easy. The banks will always advertise the fact that you can go on there and do those bits and pieces. But the thing is with that is that you run the risk of inputting the information incorrectly to what they specifically want it to be.
mm,
And also that lender may not be the one that suits your situation the best. You can also just go and talk to the bank, who will be able to um, give you an agreement in principle. But it's the same sort of scenario. It's then sort of limited to their own criteria, how they would assess you. Lastly, you go to a broker. So a broker will be able to assess your personal situation against the whole of the market, if it's a whole of market broker.
mm.
So to have a look at all of the banks and have a look to see which one's going to fit you in your situation the best. Um, and in terms of how long does that take, um, for like personally for me, if I was doing someone's agreement in principle, it could
Yeah.
take 30 minutes,
Oh,
an
wow.
hour. It doesn't take long. Once you've got there and you sat down and ready to go through it, it doesn't take that long at all.
Right. Yes, it sounds fairly quick there, fairly quick process,
Yeah.
which again is good news. Okay, well, we've covered all of the questions there, and you've demonstrated actually how a mortgage broker can help. But is there anything else we need to know here? Have you got any final thoughts?
So just sort of an add-on to that. So like being self-employed is the concept and the process you go through is the same as being employed, but I don't want to undermine it because it is a bit more of a minefield than if you were employed. Because different lenders, as we said, will assess your income in different ways. Some of them will do things a little bit differently to others. So I would say by reviewing your options across the whole of the market with a broker that's going to be able to assess everything for you
Mm,
can be worth its weight in gold. Because if you're limiting and pigeonholing yourself to a particular lender, they may not be giving you the best rate. They may not be able to lend you as much based on another lender who will look at things a little bit differently.
mm,
My one big piece of advice that I always give to self-employed people is if you're even thinking about a mortgage, to just start getting advice and start speaking to a broker as soon as possible. Because what they'll be able to do is they'll be able to assess, right, based on your current situation, this is what you can be looking at.
mm.
Whereas if you did this differently or that differently, then it will give you sort of a roadmap to where you want to be if you're not quite there yet, or you're already where you need to be, and no need to wait. You're ready to go.
Yeah. Well, there we go. Well, that's a good note to end on there, and a good kind of pointer as well to take away from the episode. Dylan, thank you for that again. Thank you very
Thanks so much.
much. Hopefully that has proved useful to anyone listening to this, watching this video. And Dylan, I'm sure we'll catch you on another episode very soon.
Cheers, Stefan.